What's going on, Derek? What's going on? Welcome in, everyone. What up, Roger? Just give me the all clear. Hello, hello. Huh, who's with us? Sounds like Tamakaze. What up, Wiley? What's going on, everyone? What's going on? Appreciate that, Roger. What a day. What a nice day, actually. I mean, marketers just pretty much gave us a nice little bounce and then they decided to just crash futures. What a nice little lovely day. I know that football is on. It's Thursday night football. The Dallas Cowboys and Saints are playing. Funny part is that the Cowboys are actually paying a backup quarterback in Taysom Hill. If they lose, that would be hilarious. But hopefully everyone closed on the green side. Today was just a little bit of a funky day. I know that we were pretty much looking at tech across the board. It was pretty much just a flat day for the most part. But looking at the trend from what I saw this morning, at I wasn't on live too much today, just a little stuffy from yesterday and today. But I should be fine by tomorrow here. But basically, what I saw when I was looking at the market this morning is all the names that were pretty much up were the names that we pretty much don't look at on a constant basis. Looking at Boeing up about $12 today. Who in the world is looking at Boeing? I don't think anybody's looking at Boeing. We all already thought that Disney fell off a cliff right now. That was up about $5 today. So as I pretty much looked at my watch list that I had this morning and looking at all the names that were practically green, I didn't really see any names that were particularly stand out in which it's on the daily watch list for us. We saw Google, that was literally the sole winner for tech right now. And that one is a little bit difficult to chart. I know that it's pretty much in a rising wedge formation like shop, but that one literally just pretty much snuck up on all of us. But looking across the board here, looking at Mastercard, Zscaler, looking at Alta, although they did have earnings, Domino's, these kind of names are not the ones that we usually look at on a regular basis. So what I really took away from today is that we saw the growth names that have been dying for days, for weeks, and months rather. All those kind of names really just got a technical bounce today. And then we also saw the airlines and the banks all pretty much up for the most part, while tech was just mostly flat to red. A few names that I pretty much, and that's why I opened the floor up yesterday on my watch list. I didn't really have a watch list for you guys. Going through the names that you guys requested, looking at Neo, I gave you guys, the fact that that was a clear downtrend. It continued to bleed out. It had a gap, actually a head and shoulders. Just recapping that from yesterday, I pretty much gave you guys that indication that it had a clear head and shoulders formation. And what did it do today? It bled out about $2 and change, and probably was even steeper during the day. Looking at another one that I remember someone asked, I believe Izzy actually asked about Shopify. And I pretty much told you guys that it was a rising wedge formation to basically short the bounce. You had about a $16 bounce that open. That was a beautiful opportunity to short that. And it even went down red about $12. So potentially a $28 move from the top when I mentioned about shorting the bounce yesterday night on that. So that was another beautiful move from yesterday, and that's why I pretty much opened the floor to see what tickers you guys really had request on and which you're pretty much holding a position on. Because right now, a lot of trends are just broken. Right? There's not necessarily a lot of patterns that I'm really gonna be able to say, you know what, go buy this tomorrow, or really keep this on your watch list that you're really gonna bleed out tomorrow. Right? So that's why I pretty much opened the floor here, and I am going to open up the floor again today. Looking at a few plays from today that really just stood out. We did have the Google that actually hit Nimbus. That was a beautiful one that hit today. We had the energy stocks that was flowing. That Apple recovery, that was just phenomenal. I think if you literally bought Apple at open and you held it all day, that was literally all you had to do. You literally recovered about what, $4 out of the entire $5 and change drop that we had pre-market. That was just a phenomenal one. And then looking at Rapids, we had a beautiful one off of Google. Of course, I mean, Google was up about $51, like I said. We had CZR, the Caesar Palace. That was a beautiful one. I know that we saw actually some unusual flow on that one as well. That was a beautiful one off of Rapids that paid. And then the Tesla one, I wasn't too certain, but I know that Tesla was up a little bit earlier. About midday, it actually had a nice recovery from that drop. It was down about what, 20 something odd dollars, and then it just went flat on the day. So a lot of moves were made today, a lot of great alerts, following what I had on the watch list, giving you defined downtrends that we had, broken trends. That's really what I took away. The other thing that I also looking at the news here into the power hour, was understanding that we actually have two more individuals with the variant in the U.S. So, the main factor of what we actually just gave us like a flash crash from yesterday was because of that variant. Now we have two more individuals with the variant. So what is that really going to do is today's price action doesn't necessarily wipe out what the uncertainty is right now in the overall markets. And as you see, futures are really just reflecting that. So it was more so a technical bounce that we got today, if you want to say a little relief rally per se. But I do expect a little bit more further downside. Are we gonna particularly say that we're gonna definitively break SPY 450 and go lower? I know it's a little early to say that, but we are gonna get a little bit more downside action as you see a lot of trends are broken and futures are reversing after today's strong rally that we had. So nonetheless, let me actually just look real quick. I'll show you guys what I'm looking at for future quick. Let me get into Nasdaq, and as you see, nothing's really changed. I haven't changed anything on my chart per se, but looking at the little megaphone action we have, we did get a nice little retest of today's price action. We can get as high as that yellow line, which would be our 20-day moving average, going up to 16,093 on Nasdaq futures, and that could potentially be our bounce tomorrow. So, although futures do look ugly now, I did expect us to get a bounce into open tomorrow, in which that would be our head fake per se, in which they're really gonna lead us into the fact that this is really a buy the dip opportunity, and then just sink us. So that's what I'm really expecting tomorrow, despite how futures really look right now. That's what I was expecting, in which they'll rather kiss the 20-day moving average and then just sink us. So that's a little bit left to see, but I do want to see if we get up to 16,093 on Nasdaq futures. That's literally my upside. And then, of course, we're looking at the downside here, breaking that low of 450. That's really our downside pressure. So it can get really brutal. Just depends upon what the market really wants to take out of the variant really pretty much spreading, and then taper just being the back sound noise basically, if you want to put it that way. All right, so that's still on hindsight. And then I just want to see also the overall movement on tech in general. As we saw, Tesla was just flat, Amazon was flat, Apple recovery literally just made that stock flat on the day. Microsoft didn't get much of a move. We saw the weakness that continues to persist with Facebook. So we didn't get any kind of movement at all in the tech sector. So that's really going to be your go-to point tomorrow morning. That's what you're really going to want to see. As far as tech being so flat today, which felt like a consolidation, where are we really headed tomorrow? In which are we going to be able to kiss that 20-day moving average and then sink us? In particular, maybe we get over the 20-day moving average and the market just ignores the bad news as we haven't before, and we just rally on bad news. All right. So that's Nasdaq looking at those levels and the low that we already put in. And then just looking at S&P and looking at our downside that we have potentially. And if you heard me yesterday, I went through all the levels. I think going as low as like about 428 on SPY, in which that would really be a meaningful 10% correction in the market. But we also have the same formation. I haven't changed anything on my S&P futures here. Still have that little megaphone action, have the breakdown, giving us a little staircase formation. As you heard me mention, we were getting basically lower highs, lower lows. Same scenario basically that we're kind of looking at here. So getting to the 20-day moving average again, maybe that's something that we end up getting some kind of bounce, whether it be we get a reversal tonight or tomorrow morning, and we likely kiss 46.14 on the 20-day moving average on the S&P. So that's what I'll be watching also. And then, of course, putting in either a double bottom at the low that we had at 450 on SPY, or rather going down to the 100-day moving average. So that's what I'll be looking at in particular for SPY and QQQ. But I won't really touch anything until I know of definitive direction here. And that's why I said, keeping positions light right now. I'm still cash yet again. As you see, I told you guys I was cash yesterday overnight. I'm cash again tonight. I'm not playing with the direction that they're trying to do. A lot of head fakes that we're seeing. So I'm not trying to get caught in that crossfire. So that's as far as feuds. That's really what I'm just looking at. I do expect a head fake tomorrow, despite how it looks. That's really what I'll reiterate, because I don't think it's just going to be a bleed out tonight and a bleed out tomorrow to close out the week. So we'll see what that brings. But other than that, I'll look at a few tickers that you guys are looking at, or you're probably holding positions on, and then we'll go from there. Let's see. Yeah, easy. I'm cash. I'm not holding anything. I'll wait to see what the market really does. If we really get buy the dip, or if we really just exceed to the downside. Really, that's what I'm looking at. Let's see what there is. What tickers are you talking about? All right. So someone mentioned Cody, CODI. I have no idea what ticker that is. Why did I type that there? All right, there we go. CODI. I've never heard of that. Probably that sounds like a Tom ticker. I actually had a line on this. Interesting. All right. So let's see what do we have. You have a little bit of a double top formation here. I would say that you're already at the 100-day moving average off the daily. So you already broke what I would say is a little rising wedge action that you had. You had a little rising wedge action right here. You broke down on that already. So you didn't necessarily get the retest, but this would be, in my opinion, this would be your potential buy zone for risk reward, being that you're at the 100-day moving average right now off the daily. Otherwise, if you end up sinking below that 100-day moving average, then it's likely that you're going to retest the zone of where you had the prior gap fill. And that's going to potentially put you towards that 200-day moving average. So your downside risk, if you don't end up holding that 100-day moving average, which you're at right now, then your downside is looking towards 2743, in which that's going to be the zone where you're potentially going to end up kissing the 200-day moving average. So that's potentially your downside. Otherwise, if you get the bounce right here, then you're going to get the retest, which this stock never technically did off the breakdown of the rising wedge. And then you'll potentially see if you end up going sideways, and then we could end up potentially getting a retest towards resistance of the highs. So that's what I'll look at, but I do like the spot potentially right here to go long. But again, you're looking at breaking the 100-day EMA, the 100-day moving average basically, which would be below 2886. So that would be your downside pressure that you're looking at. All right. Let me see another one, and everyone wants to see Tesla, of course. Actually, surprisingly, I didn't really look at Tesla today. I actually decided to stay away from Tesla. I just knew that it was down about 20 something odd points. And I just was like, you know what? I'm going to just leave it alone. There was actually something I did notice, and this is really what I was looking at in particular. Off the daily, I think it was here. When I last looked at it, I was trying to see at what point this could potentially really start to break down. I know that there's buyers literally just sitting at the 1000 strike, 950 strike, put strikes, and they're literally just waiting for the collapse on Tesla, which I don't know how long it's going to take for that to end up happening. If it even happens in 2021, they may even have to end up waiting for the new year. But I wanted to see exactly at what point, looking at the prior high that we ended up putting in before we got the downside collapse that you see here. But looking at the last time that we put in the all-time high, looking at the drop off that we had, same situation here. Looking at the bounce back, the dip, and then the potential breakout that we had that ended up being a false breakout if you're looking at this. And I'll probably put it right into a zone here. If you're looking at that, where you had that massive drop off from the all-time high, you had the V-shaped recovery, the dip, and the potential breakout that ended up being a fake out. That's really what I'm watching right now here on Tesla. You have the all-time high, you have the sell-off, you have the V-shaped recovery, you have the dip, and then the fake out on the breakout. And so that's what I'm really watching for the breakdown here. Getting down towards that 50-day moving average. That's really going to solidify this breaking down even further. But that's really what everyone's waiting for is that 1000 mark. Once we hit that 1000 mark again, it's likely that the selling pressure is going to really escalate this time. And it's not necessarily going to be a V-shaped type recovery that we ended up having last time. So that's what I was really looking at. Now getting down, if I go down to a lower time frame, probably the 2 hour I want to say. So a good sign is the 20-day moving average hasn't crossed under yet. So it hasn't necessarily defined that we've broken the trend just yet. As you saw here, we already broke down on the 20 the last time we ended up having this little complete breakdown towards the 100-day moving average. We haven't crossed under yet. So that's what you're going to want to pay attention to. Are we going to be able to hold that 20-day moving average, basically, and then continue to go sideways until this bleed out is over? Or is the bleed out that we're having is going to accelerate and then that 20-day moving average just breaks down? So once that ends up breaking down, then it's going to accelerate the downside pressure. And as you see, we're pretty much just sitting on that 100-day moving average. We literally just gave like a little flash breakdown, but we ended up holding. So that's what you want to see. Looking at under 1075, that's where you're going to want to enter puts. Once we break under 1075, that's potentially going to be your breakdown point there. So watch 1075. Let's see if we get under that tomorrow again, and if the selling pressure can really accelerate there. But of course, you want to stop loss in place. As we saw, you were looking for that breakdown once we gave that little wick to the downside, but it pulled us right back up. And we know how volatile Tesla can be. But I would literally dip my toes in there under 1075. That's when I'll play the downside and look for my next breaking down point, in which if I'm looking for support, I do like this level here, which would be around 1024. So that'll be the level that it'll really flush. So under 1075, then you're looking towards 1024 for a complete flush right there. So those are the two levels that I really watch right there. 1075 and then 1024. All right. You kind of want to swing Tesla over the weekend for those split rumors. What split rumors? I haven't heard that. I mean, that's like something like the Amazon split rumors that went on for like ever and ever and ever. And what did they do? Nothing, basically. All right, let me see what else you guys got. I got a message. Oh, all right. Let's see. Someone mentioned. All right, I'll look at those two more. Moderna and someone mentioned. I'll look at Disney. So let's see. Someone mentioned Moderna and Disney. We'll look at those two more, and then we'll probably call it a night. Actually, I did look at Moderna yesterday. I actually definitively said this was in a gap fill, and you're actually right where both EMAs are actually just crossing. Wow, that's really interesting. So you're still within the gap fill. I believe actually Avery wanted to short this one today. If I'm not mistaken, that I heard him say that. I forgot MDB. Wait, did I look at that yesterday? I don't remember if I looked at that yesterday. But basically, looking at this one, you're still within the gap fill. I mean, there's nothing here that I can really say as far as, there's a definitive answer that you're going to get back up above this gap fill, or if you're actually going to complete the gap fill. Now, I do like the moving average actually crossed up, but the fact is that you're going to have pressure here, given with this that pink line if you see, in which that's the 200-day moving average. If you can get over that 200-day moving average, then you're going to complete that downside pressure. So it's entirely possible that you end up getting up towards 310, and then you end up rejecting at 310. If you get the dead cat bounce, basically, if you get that upside move to 310, and that'll be the spot where it rejects, or you want to end up getting puts. So that would be your potential upside, but 310 will be as high as I see it going. It'll probably kiss that 200-day moving average and then reject, and then it'll go right back down to complete the gap fill. That's what I would anticipate ends up happening, unless news interjects on that by morning. That's what I would look at. So 310 is your rejection level, enter puts, and then if it fails to even pretty much get higher than what it is right now, then you're looking at just getting a flush out towards the end of the gap fill. All right. Let's see. Someone mentioned Disney. I feel like I looked at Disney. Izzy, did you make me look at Disney? I feel like you made me look at this ticker before. Disney was literally just a dead cat bounce today. If I'm looking at this on a larger scale, I mean, we already broke down all the EMAs. I don't even need the EMAs on the moving averages here. We broke down on all of them basically. Now, the key level that I really want to see this end up holding, and this is for your downside max pain, if you want to say, in my estimation, will be holding 137. I do want to see this end up holding 137, and you're probably looking at me saying it's at 147. Yeah, I can see another $10 move to the downside here. I can literally see another $10 move. We already bled out entirely. There's there's no meaningful impact to what this bounce was today, in which I would consider that a dead cat bounce. But your downside pressure still remains down to about 137. If we can't hold 137, then you're really looking at this really fat gap, in which that's why I say 137 really needs to hold. If we can't hold 137, you're looking at this gap fill under 130, 134. And that would literally put us right back where those COVID lows were, basically pre-COVID. So that would be really ugly. I wouldn't want to see it get back under there. 137 would be where I end up dipping my toes, going long on Disney, because then at that point, getting in long term on Disney at 137, I know that my stop loss would basically be 134, because if it breaks under 134, we're in a gap fill, and I'm not gonna end up holding that. All right. So if I'm really giving you an entry for a long-term position on Disney, you go long at 137, and your stop loss is at 134. That would literally be my advice going long term on Disney right here, because that would be a $3 drop, which would probably hit your stop loss. For that matter, that would be where you want to exit at 134, and below that, then it's going crash landing into the 120 mark. So that's what I give you in my advice as far as that. Now, how high can this dead cat bounce potentially go if we see that the Dow stocks and all that are bouncing and this continues to get a technical bounce? Then I would look for this to get up to 149, 149.25 would be where I see this continuing to get that bounce, which will give you about another $2 and change move tomorrow. And that'll be the point where if you really wanted to get risky, that'll be where you short it. You short it at 149.25 tomorrow, and you just take that ride down to where I say what about 137. So that'll be a beautiful ride from 149 to 137. That'd be a beautiful move. That's about a $12 drop that you're probably looking at. So that's what I would say with Disney. But this is a dead cat bounce, is what I want to say. That's necessarily what I'm looking at, is a dead cat bounce. There's no justification for this to go up $5 today. All right, there's no news on it either. So I'll say that. Um, Someone said to look at Home Depot on the 4 hour. All right, that'll be probably the last one I look at. Home Depot on the 4 hour. All right, so you're looking at this flag basically. Is that what you're looking at? Yeah, that's a bull flag. I will say that. I know that Home Depot and Lowe's was up today, so I see you're looking at that flag. It's a pretty nice flag. I will say that. So if we continue to get Dow stocks pushing again tomorrow, yeah, this will be a beautiful breakout that you're looking at. And I believe that is all-time highs, right? Yeah, it is. That's all-time highs. I wonder, I never actually charted a long-term resistance on this. Let me see if I can find one here. See if we particularly have one that really stands out. I probably have to go to the daily though. Let's see. Do I have a long-term resistance on this? This thing has literally shut out the sky. It's literally pointing just north. Wow. Yeah, that'll probably be hard to get a long-term resistance. See if we have a defined one. Probably have to go down to the low here. Oh boy. Actually, yeah, that might actually be it. What I'm looking at from what the peaks are, that was your bottom drop in March. You actually hit a resistance there, rejected, went sideways, came back down, hit again, rejected. That actually might be your point out of this flag here. So if we continue to accelerate here, that could actually put the stock at 450 potentially. So that would be where I would actually look at that one. Now, I mean, am I a person to really long and start chasing out of here? I'm not necessarily that person. But as you see, the last time that this really flagged here, you had this similar type of flag. Look at what it did after that. So that would be the point. You would probably want to wait for a confirmation on the breakout of the flag. But if you don't end up getting the breakout of the flag, then obviously, it's going to come right back down. So that would be my only caution. You want to wait for the flag to break out. But we've seen what the last flag did here. And it ended up shooting right up to the resistance. So that's what I will say about that. But that is a beautiful setup on a bull flag right there. It even looks better off the daily. So you do have a lot of upside there. I know that Lowe's was up along with it. So if the Dow stocks continue to ride again tomorrow, go for it. All right. I mean, going long up to 450 though, I would not recommend. I know. I see the long-term resistance. I just wouldn't tell you to go targeting 450 and buying that far of the money or buying leaps this high up. That's all I would say. All right. But other than that, wish I would have kept my Home Depot. The only thing is that it hasn't confirmed the breakout of the bull flag. That's the only thing I will say. So you don't have a confirmation yet. That's what I will caution you about. All right. Other than that, is this something you would trade? Would I trade Home Depot? I would day trade it, but I wouldn't swing trade it. I mean, like right now, during this market type of volatility that we have with all this uncertainty going on, it literally only takes one headline, one news break to really just flip the script on us. That's really how it is in this type of market. We get some kind of vaccine news, some kind of headline about any kind of restrictions that may go down with the new variant spreading, and you're gonna see a real flip in the market. So I don't want to be caught in any kind of those crossfires right now. The best thing I would say, if you are going to try and swing what I would say would be the Nimbus positions that we have, the Nimbus alerts. Like you saw, the Adobe one went off. I don't really think I need to look at that. I mean, we see Adobe just breaking down already. I think I posted a chart in. I'll actually show you the chart that I actually had. Let me see if I actually had it. I thought I had another one, but what I basically have here is just a megaphone action on Adobe. This is one of the Nimbus alerts, and the reason why I show you that is because, like I said, if you do feel the urge, and this is really where it's just like a urge to really hold a position overnight, I would recommend holding the Nimbus positions. All right, take the Nimbus alerts, use those to really guide your trade, your swing trades. Don't try to just swing something just for the sake of swinging it, or because you think, oh yeah, it's gonna moon tomorrow. Don't do that. That's a bad idea. All right. So if you're gonna do it, swing trading, swing off the Nimbus. That would be my best advice for you right now. And as you see, Izzy saying the Nimbus are fire. I I mean, literally, Adobe was one of the Nimbus today. I didn't particularly hold it. I know that Dan actually ended up holding it. And to be honest with you, the only reason I didn't hold Adobe and I didn't trust the alert was because it actually covered earnings. The day before expiration on the Adobe Nimbus was earnings. And that's what I really thought was the catalyst, to be honest with you. And that was the only reason I didn't end up swinging Adobe. I was literally a fingertip away from holding that. But I did sell it right before close. So, but that was a beautiful one. If you ended up taking that one, it was amazing. So it's down about what $6 after hours. You'll wake up to money on that one. So if you're holding Adobe puts off the Nimbus, congrats. But like I said, you pretty much want to stick to the Nimbus if you're trying to swing in this type of environment. Don't try to do it by yourself, and especially going into vol stocks like Tesla, like Amazon. Don't try to do that with your own TA, your own expertise you want to consider. Just try to follow the algo alerts. That would be the best thing that I would probably say, following the Nimbus, because like I said, news will literally destroy you overnight, and it may not happen yesterday night, tonight. It may end up being another night that you're gonna be like, damn, I wish I didn't hold anything. All right. So I'll leave you guys with that advice tonight. But again, just keep it light. Tomorrow's Friday. Don't try to force anything. Don't try to go in on 0 days, going all in on puts, thinking the market's gonna flush, and you see the market just rolling over. Don't try to do that. All right. But other than that, I'm gonna leave you guys there. Go watch some football, get some rest, be ready for tomorrow morning, and we'll close out the week pretty strong. All right, guys. Other than that, you guys.